Hi, today we're going to have a look at the 2011 Leaving Cert Higher Level Tabular Statement question. As usual with the tabular statement questions, we are given a balance sheet and then we are given adjustments for a number of months, and we are asked to show the effects of these adjustments on the assets and liabilities of the company. So first of all, the first thing we have to do are to put in our opening balances at the start of the year, the first of the first. So to do that, we will put in our assets first and then our liabilities, and they should then balance. So my first asset, and again, when I put in the land and buildings, vehicles and equipment, I'm going to put in the cost as a plus and the depreciation as a minus, and that will give me my net book value. So for buildings, the cost is 550 and the depreciation is 11. And again, depreciation goes in as a minus figure. Vehicles are 38 and the depreciation is 20. Equipment is 10 and the depreciation 1. Then stock will be 80,000. Now you just have to be careful when you go to do your debtors, because this figure here is the debtors less the provision of 5% to 76,000. So we want to get the total debtors figure and the provision to make up this 76,000. So if this 76,000 is the debtors less the provision of 5%, this is 95% of debtors. So to get the full amount of debtors, I just get 76,000, divide that by 95 and multiply it by 100. And that gives me a debtors figure of 80,000. So debtors were 80,000 before the provision. If they're 76 after, then the provision must have been 4,000. And there's no goodwill at the start. Usually there is goodwill. That's why I put in a column for goodwill. And again, I'd leave, after you put in all your assets from the question, I'd leave a couple of lines because there will be more assets during the year that we might need to add. So they total 722,000. Now we go to fill our liabilities, and they should total the same figure. So my first liability are, so creditors are 65, bank is 24, and expenses 2,500. So creditors are 65, bank overdraft is 24, and expenses 2,500. Then we have share capital is 440, share premium is 20, and profit and loss balance 170,500. So they're also going to go down here. 440, 20, 170,500. And again, there's no rent revaluation reserve or rent receivable prepaid, but it usually comes into place during the question, so I put them in here. And again, I'd leave a couple of lines for any further liabilities. So again, they total 722. So now that's balanced at the start of the year. So now I'm going to go and look at the individual entries for each month. And again, these individual entries for each month should balance every month also. So January, More Limited decided to revalue land and buildings to 700,000, which includes land valued at 90,000 at the very start of the year. And the reason they're telling us the land is valued at 90,000, that's not really relevant here, but we will need that when we go to work out our depreciation at the end of the year, because you don't depreciate land. So at the moment, we're just concerned with land and buildings revalued to 700,000. So at the moment, land and buildings are 550. So to get from 550 to 700, I have to add in another 150,000. When you revalue land and buildings, you take away the depreciation, or you take out the depreciation. The depreciation here is a minus 11,000. So to take that out or cancel it, I put in a plus 11,000. And then the total of those, the 150 and 11, the 161 goes down below in the revaluation reserve. And again, I'm going to total my assets here in January. They now come to 161,000, and I'm going to total my liabilities in January, and they also now come to 161,000. the next month is February. Again, this is another common note. Moore bought an adjoining business on the 1st of February, which include buildings 200, equipment 30, debtors 8,000 and creditors 40,000. So I'm going to put those in first. So buildings 200, equipment 30. So again, this is February. Debtors were 8 and creditors were 40. So debtors will be up here 8 and creditors will be a liability of 40,000. It then says that the purchase price was charged by granting the seller 180,000 shares at a premium of 20 cents. Well, they're €1 shares, so the premium is 20 cents. That's 20% of €1. So the share premium is 20%. So the share capital is 180,000. And the share premium is 20% of that, because it's 20 cents under €1 shares, which is 36,000. So now I just add up my liabilities, because the company should be worth what the assets minus the liabilities are. If they pay extra, then that is because of goodwill. So that comes to 256,000, the liabilities. Now, if I add up my assets, they come to 238,000. So the difference between my liabilities of 256 and what my assets are so far of 238 is 18,000, and that is my goodwill. It's my balancing figure, or my plug figure, 18,000. So my assets come to 256 and my liabilities come to 256. In April, it says the management decided that the provision for bad debts should be raised to 7% of debtors. Okay, so I just do a little note for this just to show what's going on. The bad debt provision should be 7% of debtors. We just need to be careful here that we take the most recent debtors figures, not the 80 from the original balance sheet. They've gone up by 8,000 now, so debtors are now 88,000 in February. So this should be 88,000 by 7%, because I said the bad debt provision is 7%, which comes to 6160. What are they in the question here? If you go up to the question, at the moment, the bad debt provision is 4,000. And so the difference then is 2160. So to get it to where it should be, we need to increase it by 2160. So I can see up here, my bad debt provision is 4,000. It should be 6160. So we need to increase it by 2160. And because it's a minus, if you want to increase it more, that's also going to be a minus. And then the opposite entry of that is if the bad debt provision increases, it's bad, it's an expense, an extra expense to the company, so it's going to go here in profit and loss balance. Anything that affects profit or loss will go into this line down below in liabilities, profit and loss balance. So the bad debt provision increases, profit's going to go down by 2160. So now I'm just going to total my assets for April. And I'm going to total my liabilities for April. And again, they should both balance. They should be both minus 2160. Okay, so on to May now. May is the month that causes people trouble. May is okay. It's June in this question. May is a vehicle. It is a vehicle which cost 25,000 was traded in against the new vehicle costing 35,000. An allowance of 20,000 was made for the old vehicle. Depreciation to date on the old vehicle was 5,500. Okay, so again, I'm just going to do a note for April. For May. So the vehicle that they're getting rid of, if we just look back at it again, the vehicle has been sold, it cost 25,000. And the depreciation to date was 5,500. So it cost 25,000. The depreciation was 5,500. So the net book value of what it's worth is 19,500. So that's what we think it's worth, 19,500. We got an allowance of 20,000. So if it's worth 19,500, we got an allowance of 20, we have made a profit of 500. So now we just have to reflect some of these changes above here. So in May, the first thing we're going to do is increase vehicles, okay, by 10,000. Why? Because the vehicle we got rid of was 20. The cost of the vehicle we're selling I got rid of was 25,000, and the new one is 35,000. So in total, they've gone up by 10,000. So vehicles have gone up by 10,000. When you get rid of a vehicle, you have to take out the depreciation. So the depreciation of the vehicle was 5,500. That needs to come out. And because depreciation is a minus, to take it out, that's going to be a plus 5,500. How much did we pay for the new vehicle? Well, the new vehicle cost 35, and we got an allowance of 20. So we're paying 15,000. So if we pay 15,000, our bank overdraft is going to go up by 15,000. And as you've seen down below, we made a profit of 500 when we traded in our old vehicle for the new vehicle. So that should be all the entries there. And again, I'm just going to total my assets. They come to 15,500. And I'm going to total my liabilities. They come to 15,500 also. June, again, this is the one that can cause trouble. Basically, what usually goes on here is we get rent receivable and then we pay an expense. So the rent receivable is income. Okay, and that's usually fairly straightforward. It's usually rent receivable prepaid, which will go down in liabilities. Okay, because somebody's overpaid us rent, and at the end of the year, we will owe them back a couple of months' rent. And at the moment, we're just going to put in the figures here, and then in December, we will work out the due and prepaid part. So for the rent receivable, we receive 4,500 to cover 9 months' rent in advance from June the 1st. So all we have to do in June is put in the actual rent receivable of 4,500 here. Now, and that will always be a liability, okay, because it's always rent receivable prepaid in these questions, so it'll go down below the liability. We need to be more careful with the expense, because sometimes the expense is due and sometimes it's prepaid. So the date is very important. So the expense, advertising, so the direct debit of 1,500 for advertising for the year ended 31st of the 3rd, 2010. Okay, so we are doing the 2010 here at the moment. Okay, so we've only paid up as far as the end of March this year. Okay, so there's still going to be 9 months owed. Okay, so it was for the year ending the 31st of the 3rd, 2010. So we still owe another 9 months this year. So we are going to have an expense due. If it was the 31st of the 3rd, 2011, we would have paid some of next year's expense. It would be prepaid. So if this date is this year, the amount will be due. If this date is next year, it will be prepaid, because we're doing this tabular statement up to the end of 2010. So because it's going to be due, the 1,500 is going to go up here. It's going to go here in liabilities. That 1,500 is going to go here as a minus 1,500 in liabilities. And then the difference between the two of them will affect banks. So basically, we get in 4,500 and we paid out 1,500. So we're up 3,000. So if we're up 3,000, our bank overdraft is going to go down by 3,000. And now we just total these. So again, the rent receivable prepaid will always go in liabilities. And then we have to be careful about the expense. Is the expense due or is it prepaid? And that will determine whether it will be an asset or a liability. So again, they both total 0. And again, there doesn't have to be entries in both assets and liabilities. There can be both in liabilities or both in assets, but once it balances each month, that's fine. And again, there are some rent receivable and some advertising due and prepaid, but we work them out in December. The next entry, July. July says a payment of 720 was received from J. Murphy, a debtor who was previously written off and wishes to trade with more again. This represents 80% of the original debt, and the debtor is undertaken to pay the remainder by February next year. So basically, this person was previously written off as a bad debt. He's now going to give us the money. He's given us 720, which is 80%, and he's going to give us the other 20% next year. And because he's doing that, on the same day, goods to the value of 440 were sold. So because he's paying us back the debt, we are going to sell him goods of 440. And there's no VAT on those goods, and sometimes there are VAT on the goods in these questions, which makes it slightly harder. So the amount he received is 720, and that's 80%. So that's 720 is 80%. So to work out the full amount he owed, get 720 divided by 80, multiply it by 100. The full amount he owed was 900. So the difference, what's still due, is 180. And because he is going to pay us that, we are selling goods for 440. And again, there's no VAT on those goods in this question. So to fill these entries in here now, the first thing we're going to have to do is stock. So we sold them goods for 440,000, and that's the cost price, because it doesn't say anything about a profit or anything like that. So because we sold them goods, they are going to have to come out of stock, and stock is always valued at cost price, and the value of the stock of the goods was 440, so that comes out of stock. Debtors, how much does he owe us now? Well, if we go down below and have a look at it, he owes us 180 from the original debt, and we sold him goods for 440. He now owes us that money. So the two of these figures together make up 620, and that's now what he owes us. So debtors are going to go up by 620,000. How much money did we actually receive? What we actually received, if you look down below, we received 720,000. So that 720,000 we received is going to reduce my bank overdraft. And the profit and loss balance is going to go up because we had written this bad debt off before. He's now going to give us all the money. He's given us 720. He's going to give us 180, so we're going to be up 900. Now, if there was a profit on the sale of the goods, I'd also add that in here, but there's not. So, so the profit and loss is going to go up by 900, the total bad debt recovered, because that's going to be called bad debt recovered in the profit and loss. And the amount is 900. So again, what's my liabilities? They come to 180. And if I total my assets, they come to 180. The next month is August. So in August, goods previously sold for 600 were returned. The selling price of these goods was cost plus 20%. A credit note was issued showing a deduction of 5% of the selling price as a restocking charge. So again, we'll do a working on this. So again, the goods were 600 were returned, and so these are sales returns, and the selling price was cost plus 20%. So that 600 is the 120%, the cost plus 20%. So to get the cost of the goods, if I get 600, divide by 120, multiply by 100. The cost of the goods is 500, and the profit then would have been 100. And it says that the restocking charge, if we go back to the question, the restocking charge is 5% of the selling price. So that is 600 by 5%. So the restocking charge is 30. So to enter these in, these are sales returns. So the goods that are sent back to us have to be put back into stock, because they were sent back to us, and stock is always valued at cost price. So now stock here is going to go up by 500 for the cost of those goods. Debtors, again, because they've given us back the goods, they don't owe us the money. So debtors should go down by 600, but we're after charging them a restocking charge of 30 euros. So we're only giving them back 570. We're not giving them back the full amount. So debtors are going to go down by 570. And the profit and loss balance. We lost, because it sent us back the goods, we lost the original profit of 100, but because we charged them a restocking charge of 30, we're really only down 70 euro. So profit and loss balance will go down by 70 euro. So again, if I'm going to add my total my assets here, they come to minus 70, and my liabilities also come to minus 70. September is the next month. In September, so a creditor who was owed 800 by us, so we owed somebody 800 euro, they accepted equipment, the book value of which was 700, so in full settlement of the debt. So we gave them equipment worth 700 for a debt of 800, so I suppose we're effectively up 100 euro, and the equipment cost 1200 euro. So we have to do some workings on the equipment because we don't have that equipment anymore either. So for September, again, we'll just do a little working down below here. For September, the cost of, if I just go back and have a quick look at it, the cost of the equipment is 1200 and the book value is 700. So the cost was 1200 and the book value is 700. So the difference is obviously going to be the depreciation. So the depreciation must have been 500. If you're given cost and net book value, you can work out the depreciation. If you're given cost and depreciation, you can work out the net book value. So the net book value is 700. We owed this person 800. So the difference of 100 is a profit because the equipment was worth less than what we owed them. So to put this into the tabular statement, then the cost of equipment has to come out of equipment. So September, if we go to equipment, we have to take out the cost of the equipment because we don't have that equipment anymore. So the 1200 is going to come out of the cost of equipment. And because we don't have the equipment, we have to take out the depreciation of that equipment. The depreciation of the equipment is 500. Because depreciation is a minus, if we want to take it out, it's going to go in as a plus 500, the opposite. We don't owe that person 800 euro anymore. They took equipment worth 700 in full settlement of the debt. So we don't owe them 800 anymore. So creditors are going to go down by 800. And as we showed in the workings, we owed them 800. They took equipment that was worth 700. So we are up 100 euro. So profit and loss balance is going to go up by 100. So again, I'm just going to total my assets. They come to minus 700, and I'm going to total my liabilities. Which comes to minus 700. October, dividend of 5 cents per share was paid in all shares. So the dividend is 5 cents per share, and again, because they're €1 shares, if the dividend is 5 cents, that means 5%. So what is the share capital at the moment? The share capital, again, we're not just taking the share capital from the balance sheet, it's the most recent figure. So share capital is the 440 and the 180 is 620,000. So again, just do a little working. So it's 620,000 by 5%. So that comes to 31,000. So if the dividends of 31,000 were paid, that's going to increase my bank overdraft. If I'm paying out 31,000, my bank overdraft is going to go up by 31,000. And because we're paying dividends, you take away dividends at the bottom of a profit and loss account. So my profit and loss is going to go down by 31,000. I'm going to reduce my profit by paying out the dividends to shareholders. So again, I'm going to total October. That comes to 0, and the assets obviously also come to 0. November, received 100,000 from the issue of the remaining shares. Okay, we just need to be careful on one thing here. Now you have to check what is the authorized share capital. What is the maximum amount of shares this company can issue? So the authorized share capital is 700,000. how many shares have they issued at the moment? So if I go to my share capital, they have issued 620. Okay, so if they got 100,000 and the maximum amount of shares they can actually, ordinary shares they can issue is 80, because their authorized share capital is 700 at the moment, they've issued 620. So to receive the 100,000, 80% of that must be share capital. And then the other 20,000 has to be share premium. Why? Because if I add this 80 to 440 and to 180, that comes to 700,000, and that's the maximum amount of shares the company can issue. So the difference, the other 20,000 must have been share premium. And because the company's after receiving 100,000 from the shares, the 80 and the 20, their bank overdraft will go down by 100,000. So again, this is going to total 0 in the liabilities, and my assets are also going to total 0. December. Okay, we have 2 columns for December. The reason we have 2 columns for December, because we have to do the depreciation here, and then we also have to go back and tidy up the amount with the bank that there were stuff due and prepaid. So we'll have a look at the depreciation first of all. Depreciation charge for the year is, the building's depreciation charge for the year is 3% of book value. Depreciation charge is calculated from the date of valuation and the date of purchase. So we'll have a look at the depreciation of buildings first of all. So again, just do a little working. And again, I just actually had it working here, and I just fill it in for November. So the authorized share capital was 700,000. They issued 620,000. So the difference was 80,000. That's the maximum share capital remaining. Then the share premium must have been 20,000 to make up the total issue of shares. So December, the depreciation rate just again was 3%, and it's from the date of valuation and the date of purchase. So the date of valuation, if we go back up here, it was the revaluation took place on the 1st of the 1st, and it was revalued at 700,000. But how much of that was land? Because remember, when we were looking at January, we said land is not depreciated. So of the 790 was land. So when I'm doing this working, it's going to be 700,000 minus 90,000 by 3%. And that comes to 18,300. Then at the start of February, we also got land and buildings when we bought the other company. So that has to be depreciated also. So that was 200,000 for the buildings we got at the start of February. Again, the depreciation here is 3%, but we only had those for 11 out of the 12 months. So I multiplied by 11 over 12. And the total depreciation for buildings is 238,000. So I now need to fill that into my tabular statement. Sorry, 23,800. So depreciation of land and buildings, I'm going to put in here as minus 23,800, because depreciation is a minus, and this is going to increase my depreciation, so it's also going to be a minus. The second part of that, we were told the depreciation on vehicles is 25,000. That's very straightforward. That just goes in here. And again, accumulated depreciation of vehicles is a minus 20,000. So if it's 25 for this year, it's also going as a minus because it's going to increase our accumulated depreciation. And then depreciation is an expense in our profit and loss. So the total of these two figures, 48,800, is going to reduce my profit. So profit and loss is going to go down by 48,800. So again, if I total my assets, they come to minus 48,800. And if I total my liabilities, this comes to minus 48,800 also. Now, the second column of December, we need to sort out the due and prepaid stuff from June. And again, this can cause issues for students. I would start off with the rent receivable because it's the easier part of it. So the rent receivable, it was 4,500. That covered 9 months rent in advance from the 1st of June. So it's from the 1st of June. That means that of those 9 months, 7 are for this year. Okay, June up to December, 7 months are for this year. So when I'm doing my workings, I'm just going to work out this year's figure. What do I mean by that? So if the total is 4,500, and that's for 9 months, to get 1 month divided by 9, and to get this year's, which is the 7 months, I multiply by 7. So of that 4,500, 3,500 is for this year. I'm going to do the same thing with advertising, just work out this year's. So the paid advertising up to the 31st of the 3rd, 2010, so only 3 months after this year. If it was 31st of the 3rd, 2011, then 9 months would have been for this year and 3 for next year. It's this year's months I'm concerned with. So they only paid advertising for 3 months this year. So if the advertising is 1,500, and that was for a year, so divide by 12, and I'm going to multiply that by 3 because 3 months are for this year. So you're only concerned with this year's months here, this working. And then we're going to put these into December, and they're going to be the opposite signs that they went in when we put them in May. So rent receivable is 3,500. So originally I put that in as 4,500. Okay, that was in 9 months. 7 months are for this year, and they come to 3,500, and I'm going to take those away because now that will leave me with the 2 months that are due. So this year's months will go in here as the opposite sign to what they went in June, and that will leave me with the 2 months liability here when I total this. I'm going to do the same thing with the advertising due. Okay, the advertising due is 375, so that is going to go in here, expenses due as 375, and that's going to go in as the opposite sign it went into June also. So that's going to go in as a plus 375. And the difference between the two of these, the net difference of 3125, is going to go into my profit and loss balance. Because really what we're saying here is for the 7 months I made rent of 3,500, and for the 3 months I paid an expense of 375. So really my profit is up by the difference. So profit and loss balance is going to be up by 3,125. Because obviously my rent receivable is a lot higher than the expense that I paid. So again, I'm going to total these. They come to 0. I'm going to total above. And that also comes to 0. And that are all the months complete. And now you just have to add each column across here to get my totals. And if you have every individual month entered incorrectly, then this should obviously balance. So for the amount of columns that you need a column for the opening and closing balance. You need a column for each month, and then you need an extra column for December. And when you're writing in assets and liabilities, don't forget to leave a couple of lines underneath the assets and liabilities and for any additional assets and liabilities you may have during the year. This is a nice question for students in the fact that if you're not sure about something about 1 month, it won't really affect any of the other months. So kind of each month is a separate question effectively. So again, nearly finished totaling all these individual liabilities. And because each month is balanced, you should be fairly certain that your total assets here and your total liabilities here will balance. So hopefully you found that useful for tabular statements, and if you have, please subscribe and like to the YouTube channel. Thank you.